Ladies and gentlemen, the Government Investment Corporation of Singapore, GIC, has issued a warning about a AI hype and a possible AI bubble. So I think it's very important for us all to take note of, because the entire stock market now is all-time raging higher and higher because of this artificial intelligence hype. So let's watch on, and I'll give you my perspective at the end of the video. In today's talk, comes timely because S&P 500 just broke all-time high again. And there is clearly a AI hype. And I would like to draw a parallel to the dot-com bubble that burst in 2001. That's largely because GIC issued a warning. I'd just like to share everybody. As usual, this content is for education and entertainment only, not financial advice. And let's go. So this warning comes in the backdrop of a ferocious S&P 500 bull run, right now breaking through an all-time high of 6,715. As you can see, since COVID time, it has been raging higher and higher and higher and higher, from about 3,000 plus to 6,000 plus. It's almost about a 100% rise, which is quite phenomenal. The NASDAQ, okay, has also hit an all-time high and is raging at a fierce, okay, 100% increase for the last 5 years. And I think it's a timely warning to everybody that nothing goes up forever without some volatility in between. And some of this volatility could be very long, more than you can tahan. So let me just give you some history so that you can understand that. Now, why are all these warning coming out right now? Well, that's largely because the market is at an all-time high at a very quick rate. And the single biggest driver is artificial intelligence. Everybody is betting on it right now. And is this a genuine revolution or a bubble in the making, or both? So now you need to understand that the entire stock market rise right now is in the backdrop of a ton of bad news. The US government is now shutting down, in fact, has shut down, and we don't know when it will start again. And in the backdrop of this, the stock market break all-time high. That's quite different from the last one in 2018 or so. And there is still tariff war, okay, that's still going on. And right now, the inflation haven't really come down to a level that we want, and the interest rate is still high. Whether the interest rate will cut or not still remains an unknown future. And right now, there are lots of geopolitical uncertainty. The situation in Gaza with Israel is not coming to an end. And the war between Ukraine and Russia is also not coming to an end. And despite all this, the stock market survived all this and just rage. The S&P 500 and NASDAQ has surged some insane numbers, and about 90% gain since the bull run of 2022. The Magnificent Seven is now leading the charge, and right now about close to 30% of the entire S&P 500 is concentrated in 7 companies, and that's quite serious. As I said, this is in the backdrop of very, very serious headwinds. The US government has shut down, and we don't know when it will start again. The tariff war between US and rest of the country hasn't really come to an agreement or some form. We don't know what will come out, especially between China and US. And right now, there is still very high interest rates and bond yields. And of course, there are geopolitical tension I talk of. But all these, the investors are now just shrugging off, because AI is the hottest baby in town, and they dominate all the narrative right now. Now, a news came out which is about OpenAI. OpenAI is basically ChatGPT. It has hit a valuation of $500 billion. No kidding you, $500 billion is now the most valuable private company globally. Now, this company hasn't IPO yet. Clearly, he really wants to IPO, but he hasn't IPO yet. And it is potentially, by the time the IPO, going to hit $1 trillion, I think, with certainty. And this speed of increase in valuation has overtaken every company since history. And right now, this has driven everybody to wonder whether there is a hype in the OpenAI journey upwards to the point that it is a big bubble. GIC came out and gave a warning. Now, that's not very common. So Brian Yeo, the GIC Chief Investment Officer, said that there is an AI hype bubble forming. Now, this is quite rare because normally government of officers or pseudo government officers try not to make such comments, but to warrant him to make this comment, I think is quite serious. Now, if you don't know, GIC's CIOs are very powerful people, very smart people. We have an encounter with Ngok Song, which was a presidential candidate a few years back, and they were all very bright people. For him to come out and make such a statement, I think it's quite, quite something. So right now, there is extreme valuation. Some of the AI ventures right now are value some of the employees at $1 billion per employee. And what if AI doesn't deliver on the promise that it has? Then the bubble could burst catastrophically. And clearly, a lot of the investors will be burned, and early stage investors could face complete wipeout. Now, there is a S&P 500 illusion now that's happening. Now, clearly, Mr. Lu has always been an S&P 500 fan. However, let me issue also a warning that right now, S&P 500 isn't that a darling to me as in the past. Doesn't mean I won't invest in it. But I need to emphasize this. I always believe in globally diversified index. Now, but S&P 500 ain't that diversified anymore because it is now highly concentrated on 7 companies, and there is some risk of over concentration. All we need is AI bubble to burst, the S&P 500, NASDAQ will just crash. Okay, so it is something that we should take note of, that if you want to own the S&P 500, note that it can have a catastrophic crash, and it ain't as diversified as we hope it to be. Now, just share with everybody that there was a precedent, and that was the dot-com boom and bust in the late 90s and to early 2000. So it started around 1996 when the tech hype started to accelerate, and 1997 was just insane IPO mania. Companies with zero revenues, huge valuations start appearing, and the NASDAQ climbed 85% in a single year. By the way, it's not that far right now. And at a peak, NASDAQ was up 400% in 4 years. Okay, 400% in 4 years, that's quite remarkable. And then as exciting as the ride was upwards, as catastrophic it was with the burst. So the dot-com burst of 2001 wiped out trillions of dollars. The NASDAQ wiped out 78% of its value. So you go up and crash by 78%. There were massive bankruptcy. Pets.com, Webvan, eToys, everything gone. And many investors' life savings were vaporized overnight. And the hot internet firms that everybody was chasing became worthless. So let me remind everybody again, this can happen again. So how long did the crash last? It lasted for about 15 years. NASDAQ did not recover until 2015. So those people who invest right at the peak, which could be now, okay, actually lost 15 years waiting. And some people don't have 15 years to wait. So the hype chasers lost decades of wealth building. Patience investors who bought crashes prospered. But clearly, right, this is a very expensive lesson. So let me warn everybody, chasing hype is expensive. Time you can't get back is even more expensive. So let me warn everybody again, it's very dangerous to chase hype. Okay, it's very, very dangerous. Many people wrote to me and thanked me for help, for giving them some leadership in investing in S&P 500 they followed. They are sitting on hundreds of thousands of dollars. So far, I've seen many, 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 many. I need to warn everybody, that this thing may not last forever, and we don't know when this whole thing would end. So it is true that the market may rise further, but it also could fall. It's impossible for us to time when this whole thing will come to an end, or even if it will come to an end. So let me share everybody, I think it's probably wisdom to play it safe, okay, rather than chase hypes. I always favor in crash buying because you buy on the low, even the stock market would go up and come down in a massive way. You bought it on the low, you still be okay. So I like to buy when the market is at the worst and the fear is at the highest. And therefore I think I'll be safe. I can't say the same for many of the hype chasers. And let me give you my perspective, okay? Crashes will always come. We just don't know when it will be. And I think, it's proven to many of you that, crash buying does work. So be greedy when other people are fearful. And right now, if other people are greedy, you better be fearful. So I feel that diversification is critical. Don't let all this hype and all this concentration risk expose you to this kind of risk. So I think that as far as possible, globally diversified is assets are very important. And don't forget your CPF. Right? Your CPF is a strong foundation. I always say that is something very important. And I think for rest of you guys, you have your own other portfolios. As long as it is diversified, I think it's on the safe side. My current stance now is right now, I really don't know whether AI is a bubble or genuine revolution. I'm a big believer of AI as a productivity tool, as a life game changer, and it's going to bring human to the next level. I'm a big believer. I use AI and it changed my life. But however, will AI grow to a bubble and burst? I don't know. Will the market rise and then fall from here? I don't know. And when will the crash come if it ever comes? I don't know. So what I'll do is when valuations are right now stretched, I do take some profits out and rebalance into other assets, diversify it, and also keep a dry powder and just not chase all this hype. So my final takeaway is this. Be careful, especially to many of my followers and viewers, where you are at an age where you can't afford to lose. So don't bet your retirement on this hype. Bet on discipline, bet on wisdom of diversification. And just remember, never risk money that you need for money that you don't need. And it's always very dangerous, and always diversify into safe assets that you have, especially CPF and CPF Life. So we shall watch this few very closely, but let me issue a warning to everybody that's overly hyped in this thing. You can lose a lot of money and lose for a very long time. So just remember to be very careful. Okay. So let me hear your comments and I'll see you possibly tonight. Bye bye.